please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. That's the SGX Nifty indicating that we'll have a positive start. Now keep in mind the Nifty futures have slight bit of premium. Yesterday at one point that premium had evaporated, but towards the end in last 10 minutes we had fresh rally, and that led to that Nifty future premium of about 13 points. So adjust that and you will arrive at the Nifty spot opening if the SGX Nifty is right. 11,750 is what the futures opening is, which would mean 45-point gap up, not 27. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar with us. Good morning. Ashwani, we had a massive trending day yesterday, 135 points on the Nifty. The SGX Nifty is indicating another gap up of 40-45 points. How do you trade then?
See, basically, today you don't want to be too aggressive in terms of chasing like we did yesterday. But the idea should be that any sort of dip, 20-25 points from a high, should be good enough to buy. Today also, interestingly, you'll have all-time highs on the Bank Nifty. And often when these levels are crossed, the market tends to run up a bit more. So as I've been saying yesterday and today that Bank Nifty is going to outperform. So that's where I'm looking. But today I'm not too eager either to run profits too much or to get into the market, first up without seeing how well the market negotiates the gap. So today, while the trend is higher, you have to time it a bit more, because from the open, you may not have a significant rally. So to get a significant move, you need a bit of a decline before you enter into Bank Nifty for me and maybe Nifty for others. But overall, market remains in a strong uptrend, and possibly this is a fresh round of expansion.
On the Bank Nifty, good morning, Ashwani. You have no doubts the rally continues, and will it continue even the outperformance over Nifty?
I like your faith in technical analysts. To say that you have no doubt is a bit too immodest.
All right, let me rephrase and say, do you think?
I would think so, because given yesterday's movement, given that it's coming out of consolidation, possibly some bad news, weak macros, some shorts also, I think it will make a fresh high. Now to get to that fresh high, I think entering into a dip is good. Asian markets, Hang Seng is down to 40 points from 150. So there is a bit of consolidation. So try to buy into a 20-point dip on the Nifty, maybe 60-70 points on the Bank Nifty, but finally, at least today, we should be closing higher.
Okay, well, Sudarshan Sukhani is also with us. I know we keep pondering over the Nifty, but let's give a little bit of thought to the Sensex as well, right? Almost at 40,000. Sudarshan, good morning. I never thought in my career I'll see 40,000 so early, because when I joined in October 2008, the Sensex, it was a peak of the Lehman. Lehman had just happened, and the Sensex actually fell to about 7,000 or so. From there, coming back to almost 40,000. Of course, it took 10 years, but I didn't think it would happen so soon.
When I joined, it was 2,000, I think. When Lata joined.
Sonia, in your lifetime, you will see the Nifty at 1 lakh. I mean, why do you have such a bleak view of the world?
Because when you join, and you join on 15 September 2008, the day Lehman collapses, from there to see it rise like that. I mean, of course, when you join in a bull market, it's fine, right? But when you join in such a bear market,
I've seen 3 digits.
You've seen a lot of cycles.
3 digits in Nifty, when Nifty was not even an index we used to look at. We used to only look at the Sensex in those days. Anyway, I think Sudarshan and Ashwani and Mitesh have seen much more than all of us in terms of every minute and every second what the indices have done. But Sudarshan, I mean, if you track the Sensex, then how far is 40,000 away? Rather, how many hours away?
No, I don't track the Sensex, but I am assuming that the Sensex is now in 5 digits, and there will be a time when we will all talk about 6 digits in the Sensex.
Oh, wow.
So, all right.
Yes, good to hear that.
But the Nifty is what, yes. We talked about dreaming of 12,000 in the Nifty, and the chances are that we will reach that level soon enough. For the markets, it's much safer to hold on to your long positions. Don't dabble early morning in additional buying, But don't get out of your positions. Once you get out, then it becomes very difficult to get in. Stay, and generally today there would be some dips, some consolidation. Whichever happens would give us an entry opportunity in the Nifty. I personally think, and I said that yesterday, that the Bank Nifty, while it's going to go up together with the Nifty, is likely to underperform. And that sense continues to remain. So my focus is on the Nifty, and more so after that big gain in the Nifty Bank. I think it's the Nifty which will give us the bigger rewards. So, but anyway, stay long in the market.
Okay, stay long in the market. Mitesh, what about you? Continue to stay long, and what's your view on the Bank Nifty?
Yeah, good morning, Sonia. Obviously, continue to stay long, and the Bank Nifty is very importantly placed in the sense that we have seen 28,350, 380 as some kind of an intraday pivot, and 27,800 as the base of the range. We've bounced back from the lower end yesterday to the upper end of the range. I think the key here would be if we get a breakout beyond 28,350, 380. So in case we see Bank Nifty 28,400, a fresh trade would emerge on the long side with the 80 to 90 point kind of a stop loss and a target close to about 28,700. And a word on 15th of September, Sonia, that was the day when I started my own venture. And when you start in a very bad market, the only way you can possibly go is up. So I don't think you should be surprised with the kind of rally which you see.
Makes two people trial by fire.
No, Mitesh, you've done well, of course, in the last decade. Ashwani, let's talk about individual stocks then. What are the stocks on your list?
I'll still buy into ICICI Bank. That's a buy with a stop of 335, target of 352. Havells is a buy with a stop of 714, target of 740. Hindalco is a buy with a stop of 225, target of 240. Jubilant Food is a buy with a stop of 1535, target of 1580. And GSFC is a buy with a stop of 114, target of 126.
Okay. Well, I'll come back to you, Ashwini, to ask you about the fertilizer stocks. They have something very positive coming their way from the news that our sister channel broke. They are going to get their subsidies weekly instead of waiting, for months, sometimes even a year. But before that, Sudarshan, what are the stocks you are trading?
Well, the focus is on non-banking stocks, starting with Hindalco. Excellent charts. Apart from a day trade, if you want a positional trade, buy Hindalco. The positional targets could be 265, 270. I have two pharma stocks, Cipla and Torrent Pharma. I've been talking about how pharma is entering into a bull market, and finally that seems to be happening. It was happening earlier but not visible. So Cipla is a buying opportunity, 4-day trading range and a breakout on the upside. Torrent Pharma is making new highs. Again, there was a very mild pause. I think that pause should resolve itself again on the upside. So there are two pharma stocks. TCS, IT did well yesterday after opening a little mildly. That should continue today also. So most IT stocks should do well. The TCS has been laid back for 3 days, so perhaps it will play catch up. That's a buying idea. There is one short sell, Tata Motors. It's the least favorite of my stocks in this universe. So I'm assuming it will still go down.
Okay, well, what about you, Mitesh? What are the stocks that you're looking at? A lot of mid-cap names on your list today.
In fact, as I believe that the index could mildly consolidate after yesterday's gains and a gap up opening today, I think mid-caps could be in focus. I also have fertilizers, GSFC features in my list as well. That's a buy with a stop at 114 for target of 125, though I suspect eventually 134, 135 can happen over here. Also is a buy on Adani Power, where the intraday charts gave a fresh signal in the last half an hour. So buy with a stop at 32.80, look for targets of 35. TVS Motors, after going through a good correction, now seems to be getting into a mild uptrend. So that's a buy with a stop at 550. Look for targets close to about 590. And Bamal Lorry, that's a cash stock. The candlestick pattern and the overall setup is quite positive. So buy with a stop below 220 and look for targets of 238.
Okay, well, now let me get back to my fertilizer question. Ashwini, any of the stocks you would trade, or many of them?
Well, apparently this news was as usual in the market, and Chambal, GSFC, all kinds of fertilizer stocks, they've been through a bad correction. So now my sense is that they could move up 15-20% from here.
Okay. I had yet another stock question on PFC REC. Sudarshan, are those stocks still worth buying? I mean, we've seen them bottoming out, so to speak.
Well, they could do something very good because the whole market is going up, but they are not worth buying. They are relative strong underperformers. See, some of the PSU banks have gone up, but they've gone up so little. So the PFC and REC will act like those, mildly performing PSU banks, not worth going into. When we have so many options to put our money in high quality stocks with significant rallies ahead, why would we look at PFC and REC? I think we should be avoiding them.
Oh, absolutely. Okay, we'll come back and discuss some of those high-quality stocks with you. But for now, let's also discuss some numbers. Finally, Jet Airways reported its earnings yesterday. We had to wait till 8 p.m. in the evening, but it was another quarter of losses. In fact, a howler from Jet Airways through the board. Anshuman Deb of ICICI Securities joins on the phone line to talk about that. Anshuman, another weak quarter for them, but they did announce some cost-cutting measures. They spoke about monetizing the Jet Privilege loyalty program. Do you think all that is enough to for the stock to recover, or do you get a sense that it continues to be downhill from here?
Two parts to the cost recovery program. So one of the part was that of the 2,000 odd crore of cost savings that the company has said. This was pretty much in line with the already stated plans the company had. So they were planning to reduce their cost by 12 to 15% on a per ASK basis by FY20. So that should have given them around 2,000 to 2,400 odd crore of cost savings. So that was already part of the system. Incrementally, they have said that they're going to monetize the jet privilege and they're going to, change some of the seat-seating structures of their 737 fleet, which are all good measures. But the amount of losses that the company is making purely on basis of lower yields and high cost pressures, coupled with the fact that it has a high forex liability. So every quarter you do a mark-to-market, you will incur those losses. So those cost savings might not be sufficient for the company. And the more important part is that it requires a certain amount of capital funding as of now. So that's the more imminent crisis which the company faces. But the company has said that they're going to infuse some equity. So we will await some clarity on that.
Okay, so at the moment, is it a sell? Do you have a view at all on the stock?
So right now, airlines as a typically can recover very fast if the macros change. But based on the current macros, it's difficult to have a constructive position on stock. So we had an ad rating based on the valuations and the kind of recovery that we are factoring in FY20. But having said that, FY19 is going to be a washout year in terms of earnings. So a lot of corporate actions will dictate the stock. So as of now, the situation is that we have an ad rating, but we will hope to have more clarity on the funding issues.
Okay, but why would you have an ad rating? With the same macros, other airlines have done much better. What justifies the ad rating?
Yeah, so basically, see, in terms of your revenue per ASK or cost per ASK, whatever the P&L that the company has, it does have several levers to improve on its own. So in the sense that the higher sales and distribution costs, the higher maintenance costs, all will change effectively when you change your fleet to a new fleet. Some of the cost savings which Indigo has traditionally done or an efficient player has traditionally done, Jet Airways is doing it. It's a late entrant to this entire order book driven aircraft induction.
But Anshuman, just one final question. Do you feel that the entire sector could underperform or rather could not give returns now? Because, yesterday we had comments from Ajay Singh of SpiceJet who said that the industry is still in great stress. These are using his own words. And he said that, it's going to be a very competitive fares once again in this busy season. So do you think that the entire sector could see underperformance?
Yeah, so FY19 will be underperforming here. There's no doubt about it. FY19 Q1 is a strong quarter, which has already been a bad quarter, and Q2 is a weak quarter. We know. So half of the year we know that it's been a very bad earnings. So FY19 is a washout year. So it will be underperforming in terms of FY19 earnings. But then the capacity and the capacity addition has to adjust with the realities of lower fares. So one has to expect that there might be some lower capacity addition, which will improve the fares and eventually turn the earnings. But on FY19 basis, we are not, obviously, it's a bad year.
All right. We leave it at that. Anshum and Deb, thank you very much for joining us. And one hopes that Jet Airways is able to operate on those leverages available to it of reducing sales and advertising marketing expenses. We take a break on that note. Up next, we are going to get chatting with a very big foreign institutional investor from the sidelines of the Motilal Oswal conference. You can see Nimesh there chatting with Joe Werner. In a bit, we will also be joined by Prakash Diwan. Well, over to Nimesh, who is at the sidelines of the Motilal Oswal Global Investor Conference, and with him, that important foreign investor voice that I was speaking about from Solitude Investments, Joel Werner. Over to you, Nimesh.
Thanks, Sada. So yes, I have Joel with me. He's an FII based out of Hong Kong, and he invests a lot into India and China as well. So Joel, thank you very much for talking to CNBC TV18.
Thank you for having me.
I was looking at the brief profile and the profile of your company, and it suggests that your major investments are in India and China. First of all, in India, well, the markets are up at record highs, but even currencies depreciated 10%. So net for an FI investor, it's not much you've made in the dollar terms. So what's your view generally in India at this point in time?
Thank you. That's a great question. The rupee has certainly been a headwind for our investments in India. I think the one thing that causes us to be calm and forward-looking is that our expectation, generally speaking, in some of our markets is that we'll find weakness in some of the emerging market currencies, if I can use that term, versus the dollar. We're a dollar-denominated fund. So when we underwrite any given investment, we're looking for, first of all, we're looking for a very high return on our investment. So when we underwrite an investment, we're looking for 2 to 3 times our money in 1 to 2 years, which makes a very special investment, and they're hard to find. So we tend to have 15 investments at any given point, and 10 of those investments tend to make up 80% of our capital. So we're looking for very specific metrics and qualities of those businesses and of those managers. But the weakness in the rupee has been a pain. It's been, I would say, a little frustrating. I think the discussion around 2 things driving that, I think, would be the rebound in oil and tariff war. I'll use that in quotes because it summarizes a lot of things that are happening, have happened, and what might be ongoing in discussion. But because we're looking for companies that are compounding at such high rates of return on their capital employed, weakness in currency, again, we would expect somewhere between 4 to 5% depreciation in the rupee versus the dollar as we underwrite our investments. It's been a little bit heavier this year, but not necessarily out of step with other currencies where we're invested. So while our fund is effectively flat on the year to date, our compounding return since inception is about 12.8%, and that's really how we track our performance with our investors.
You spoke about being flat this year, Y2D, for the India portfolio, and essentially because of exposure to the mid caps and small caps. That's seen a bit of brunt since the beginning of the year. How are you looking at that space, and after the correction, do you think there is enough opportunity which is emerging in the mid cap and small cap in India?
I do, and thank you for the question. It's a great question. Again, our strategy is to invest in companies that have market capitalizations, and I'll use U.S. dollars, forgive me, it helps, it keeps it easier in my head, between $500 million US and $5 billion US to start as underwriting the investment. That would fall into the small and mid cap universe. So that's really our hunting ground. So while I've not talked to a number of investors who have will pick and roll and move up into larger caps, that's not really our mandate, and that's not really our, I'll use a quote, wheelhouse, where we're looking for great investments. It becomes just a question of the law of large numbers, where if we're looking for something that can grow by 3x, and then by the nature of something that can grow 3x, it can probably grow by 10x over a much longer period. If you buy a very large market cap company, it's very hard to do that. So that's a little bit of an indirect question so if you need to follow up, I apologize. Yeah, thank you.
Joel, correct me if I'm wrong, but I was looking at some data, and it suggests me that your past exposures in India has been largely in the financials, the BFSI space. I don't want to name individual stocks, but largely in the financial space. Is that something which still excites you? And apart from financials, where do you think there is investment opportunity right now as far as India is concerned?
Sure, thank you. That is historically true. We are generalists by nature, and I'm a generalist by training. For better or for worse, I do think it's personally the best way to invest. We had a large investment in IIFL. Okay. That did very well for us, especially the first half of 2016. We're still a large investor in that company for our fund. I think there's a great opportunity as that business separates into 3 separately listed operating companies. Right. But our exposure to financials is really a byproduct of looking for asset management companies. Mm-hmm. So IIFL has one of the world's best asset management companies. Right. We have a similar investment in China named Noah Holdings, which is effectively a very similar business without an NBFC, but has a terrific asset manager behind it. Asset manager businesses tend to not have the same balance sheet implications as traditional financials do. Mm-hmm. One of the things that we look for at Solitude Capital Management is we're looking for very clean balance sheets. It's like one of the things I've learned over investing in my lifetime, where our fund, we're called a hedge fund or a special purpose investment vehicle, but we don't use leverage at our fund level. And we generally are looking for companies that have net cash or very conservative balance sheets on their own company level. Okay.
So given that, you look at net cash and clean balance sheet companies, does Indian IT mid-cap stocks or IT stocks fit into your bill? And do you have any exposure to any of the Indian IT names?
We do not have, I'm just checking, we do not have any exposure to the Indian it's been a very challenged space for quite some time, and so we've been just kind of staying away from the fray. That being said, myself and my investment team, we cover the 2 main countries that we cover are about 2.5 billion people and have very large tangible addressable markets. What we're looking for are niche businesses run by extremely talented managers that are highly ethical, driven to create wealth. And not only have inherited wealth, but to create their own wealth for themselves. And creating wealth is via the share price appreciation. So the IT sector is exciting, but most of that excitement, in my opinion, is in the private investing world, where we don't do any investing.
Okay. I believe you also have a bit of an exposure into the Indian consumer space, the consumer staples and the consumer discretionary. There has been a lot of argument about valuations being quite rich for those sectors in India. Do you think there is still money to be made in the consumption stocks in India?
Absolutely. I mean, we're starting at such a low base. I think to look at things like companies where they have a lot of operating leverage and where the companies can grow. It is, again, very early days. A lot of people make the comparison that India looks a lot like China did in 2004. I went to China in 2004. I can see the comparison. Obviously, very different countries, but you do look at a number of the consumer discretionary stocks. I can think a couple off the top of my head. I don't want to name them because to offend anyone, but they do trade at like 70 to 100 times earnings and will go up, and we don't own them, and that can be challenging from that perspective. So we do tend to be disciplined buyers. At most, we'll pay basically 1 times growth on profit after tax or on an EBIT basis on a multiple, and we're looking for that to basically go to 2 times growth. Okay. Yeah.
Okay. The other big market where you have a large exposure is China. What have you making of the Chinese data of late? And from a point of view of Indian commodity stocks over the Indian metal market, how are you positioned there, and what's the broad view on the China per se?
China. So I've lived in Hong Kong for about 6.5 years. I've worked with my Chinese colleague who works with me now at Solitude Capital Management for approaching 7 years now. Making broad statements about China and Chinese data is very difficult. We tend to avoid investing in any commodity sector in general. That being said, you can't ignore it because it will drive the valuation of the currency, it'll drive trade flows. So what we'd like to see is an end to, I'm a believer in global trade, world trade, open borders, and value creation, and nations interacting together.
Okay, now that's getting into broader issues. We will play that entire conversation to you later on in the day. For the moment, we have to prepare for pre-market. So, quick break and we are back.